Hello, welcome to today's real-time market analysis for February the 17th, 2025. This is a single session. It includes both technical and fundamental analysis. We begin with the disclaimer. Suggested entry and exit points are only suggestions. These suggestions are both time sensitive and for educational purposes only. Breaking news, and you can see on the left-hand side, Magna auto parts maker warns tariffs will be disruptive, but prepared to face them. And here, the Trump says auto tariffs to come in around April the 2nd, 2025. And here we see exports by category. The number two would be vehicles and other than railway and tramway, 63.7 billion for 2023. So that's the number two category that we export to the US, and that's a serious problem. But we have what I call rantings. I have occasionally a couple of emails, once in a blue moon. There will be people ranting, and this time they have been ranting about Trump. I think I got 3 emails out of the thousands of clients where we have, but I thought we will deal with the issue. And the reason why is that your mindset needs to be on the right side. Okay, you are ticked off with Trump. Hey, he is duly elected president of the USA. Doesn't matter whether you're ticked off or not, you can't do nothing. Tariffs imposed on Canada, Trump is looking out for his own country, whereas Trudeau looks after the globalists, and you can see that by his attitude. And Carney is not any different. In fact, he's probably worse off than Trudeau. Oil tariffs by Canada on exports to US. This is a self-inflicted wound. We buy US oil. I mean, the oil is shipped down south. There is no east-west pipeline. Our oil is piped to the US, and then we rebuy them when it gets up to Sarnia. There is a limited inter-provincial trade. There's more trade north-south than east-west, and that's a Canadian policy. This is a dumb, jackass type of philosophy. We are a bunch of provinces trying to be a country where you have provincial. Soon they'll build a wall around Quebec. I don't know. Auto industry, Canada will lose thousands of jobs. Buy Americans is Trump's call, and our special smart guys are saying they will 100% tariff on Tesla. But Canada buys only 1% of Tesla's global production. This will be no impact on Elon Musk. Canada funded billions of dollars on EV battery production. That's going to be a wasted. These guys are going to pack up and move to the States and reduce the exposure to Canada. Canada's carbon tax, greater than the 25% tariff. Have you checked your hydro bill? Do you know natural gas? There's a 65% part of your bill is carbon tax and GST on carbon tax. An individual earning 100,000 in Canada will pay approximately 49,688 in taxes, while an individual earning US dollars 100,000 in Florida will pay approximately $36,500 in taxes. The tax burden is higher in Canada due to the combination of federal and provincial taxes. That's excluding all the other taxes, fuel tax, whatever. Canada's NATO obligation. Overall, a 2% reduction in GDP would have far-reaching consequences for Canadian economy, affecting everything from employment, income levels to government, finance, and trade. So, if we have to raise, we are paying, I think, now 1.3%. If we had to raise it to 2%, it will be a devastation for the Canadian economy. While Canada is facing a crisis, this is a crisis, the government is shut down. And we have the nutcase Doug Ford calling for the election in the midst of this crisis. So, who is to blame? Who is to blame? It is the Canadian government policy that has caused this disaster. If we had an east-west pipeline and natural gas shipped to outside to Europe and to China and Japan, we would have made fortune. But so it's no point ranting about Trump, whether you like him or dislike him. It does make no difference. I would rather have Trump than Kamala Harris, or Joe Biden, or even Justin Trudeau, Governor Justin Trudeau. Well, that's all for the ranting right now. Let's begin the work here now. Let's begin with fundamental analysis. We begin with the China CPI increased to 103, 60 points in January from 102, suggesting that the inflation factor is still serious in China. So China CPI, so inflation may be a major problem within China, and therefore it will impact its economy. China's inflation rate increased by 0.6% in January over the same month in the previous year, the most in 7 months. And you can see from here what's happening to the Chinese economy. As inflation eats into their profits and to their spending power, this will become a major challenge for the government of China. Now, looking at European news, the euro area economy expanded in the fourth quarter after an upward revision, but the growth was still meager as the biggest two economies contracted and overall employment logged only a marginal increase. Gross domestic product grew by a revised 0.1%. Sequentially, flash estimate from Eurostat revealed. This follows a 0.4% in the third quarter, and that's not very good. On a yearly basis, GDP held at a steady 0.9%. Today, data showed that the number of employed persons edged up 0.1%, slower than the 0.2% in third quarter. Year-over-year, employment growth slowed to 0.6% from 1% a quarter ago. In the whole year of 2024, the economy grew by 0.7% and employment increased by 0.9%. Although the economy performed a little better than previously estimated, growth was extremely weak, and early signs show that it's got off to a very slow start. And this is the problem in Europe, and they're going to be hammered with tariffs from the US, and that will bring certain challenges into the European economy. I mean, the major concern for Europe is its inability to sell its products to the US because of the coming tariffs will come to slam dunk their economy and their protected industries. And one particular example will be the dairy, which here in Canada, dairy in Quebec is protected, and that's going to get nailed by the tariffs imposed in the US. And the same thing happening in Europe, and the automobile industry will have the same impact, and its continued challenges with China will also bring the economies in Europe to a slow start. Now, having looked at that, let's look at Germany. Germany wholesale prices for the second month increased the straight December. The wholesale price index advanced by more than a 0.9% for the year after rising 0.1% in December. The second consecutive increase, prices were expected to grow 0.2%. The main reason for the increase in wholesale prices were higher prices of non-ferrous metals and semi-finished products. Prices of coffee, tea, cocoa, spices were considerably more expensive than in the same period. So you see here, there is a challenge in Germany. Germany is going through a very, very difficult time, not only in the economy, but also in the social secure challenges that it faces. You saw recently there was this immigrant from Afghanistan, Muslim immigrant, who drove a car and killed, I think, a mother and a daughter and injured a whole bunch of people. So this immigration policy that they have introduced in Europe is going to cause turmoil both in their culture as well as in the economy, and that may a major problem. Now, looking at the U.S. jobless claim, and you can see for the first time claims on the benefits fell by slightly more than expected in the week ended February the 8th. The report said initial jobless claims dipped to 213,000 points, a decrease of 7,000 points, and the economics expected slips to be 215 from 219. Originally, I reported the previous week. The Labor Department says the less volatile 4-week moving average edged down to 216, a decrease of 1,000 from previous weeks. Continuing claims, a reading on the number of people receiving unemployment assistance fell by 36,000 to 1.9 million. The 4-week moving average slipped to 1.9 million. So the jobless claims is a major concern here. 219,000 to 213,000 is not a good picture. We expect that to be revised in February. US CPI 0.5%, an increase. Consumer prices increased by more than expected. The Labor Department said consumer price advanced by 0.5% after climbing 0.4% in December. The economists had expected to rise 0.3% versus 0.5%. The report also the annual rate for consumer price 3.0% in January. This, when the CPI increases, then you have a challenge with the interest rates. Okay, interest rates. The Fed will continue to maintain their fairly high interest rates. Now, looking at a number of other figures, and you can read this for yourself. The U.S. business inventories unexpectedly dipped 0.2%. Industrial production climbs more than expected as utilities output spikes. Okay, and import prices rise modestly in January, but export prices surge. And you can see the increases there and the decrease in industrial production and business inventories. So you can check that out. Why do we need to know about this? We need to see, remember, 70% of our exports go to the US. That may change, but we have to make sure that the US is doing fairly well. Now, the Federal Reserve delivered its semi-annual monetary policy testimony before the Senate Banking Committee, and his belief that central bank does not need to be in a hurry to adjust policy stance. Powell also noted interest rates have been lowered by a full percentage point since last September, describing Fed's policy stance as significantly less restrictive than it has been. The Fed reiterated the central bank will assess incoming data, the evolving outlook, and the balance of risk considering the timing of it. So basically, he's saying that he's going to look at the data, and we just saw the CPI figures suggesting an increase or at least maintaining the interest rate. Now, their interest rate differential between the U.S. and Canada will terribly infect Canadian dollar, as the hot money, the huge billions of dollars that are sitting in pension funds, money market, will move from currency to currency, and they will go to the U.S. because it gets a better interest rate return, and that will put pressure on the Canadian dollar, adding to our tariff problems. Now, let's look at the Canadian currency as we talked about earlier, and you can see while it has strengthened to $1.43, 143, it rebounding from a 22-year 145, 146 in January to a 2-month near high. The Bank of Canada softened its dovish stance, basically meaning it continued to reduce interest rates, highlighted concerns that prolonged uncertainty over U.S. potential tariffs expected to weigh on business investment and fuel inflation has forced policymakers to refrain from offering foreign. So they're not trying to say we're going to decrease interest rates. they're going to watch what happens to the tariffs and all other things. That again, like I said, if the differential between interest rates in the U.S. and Canada remain, then the Canadian dollar will slowly take a dip. Now let's look at the value of building permits. This was out last week, decreased to 9.7 million from 11.7 million. Now, why is the decrease? Why is this important? Because housing permits and building permits are an indicator of the economic strength within the country. And therefore, when building permits are declining, it shows there's a lack of confidence in the economy by realtors and factories and so on. Now, what about new motor car sales? And here we see in August 2024, there was 166,000, and September 166,557, and then in October it dipped to 164,000, and then November 161, and now look at that, 135,500. There's almost a $30,000 drop between August, and that's not very good. And this will be a greater challenge when Trump imposes tariffs on automobiles from Canada. This is going to be a major challenge. Economic update, and you can see here, manufacturing shipments, actual was 0.3%, the previous was 0.8%. Manufacturing shipments year to year, this is month to month, year to year, 0.3%, negative 0.4%. Wholesale sales month to month, negative 0.8 from a negative 0.6, and wholesale negative 14 and up from negative 2.5. And so the manufacturing shipments are going to be a major challenge as we manufacture stuff here and ship it out to the U.S. That's going to be a problem. Wholesale sales again shows negative 14, and negative 1.4, which is an improvement from negative 2.5. So that's a positive direction. Now you got to go to the earnings sections and you got to see the blog. We have posted IFC, Sun Life, ABX, QSR, Shop, TD. It's important for you to know how these companies are did, because if you see your stock fall and you have no idea that the earnings came out, it's your call. Also, FTS, Fortis, MG Magna, TRP, TC Energy, Enbridge, Sun Life, WCN. These are all posted in the blog, and it's up to you to go check it out. Now, commodities, and you can see gold. There was an approximately $350 increase in the last 3 months, mainly because of concerns of global trade war. The dollar slipped to a 2.5-week low and was set for a weekly decline of 1%, amid growing optimism of the Ukraine-Canadian peace deal and delay in possible reciprocal U.S. tariffs. U.S. President Donald Trump has signed a presidential memo on reciprocal tariffs for the more balanced trade, saying he anticipates the investigation will be completed by April 1st. And then he says on April the 2nd, he will include reciprocal tariffs. Meanwhile, Thursday's U.S. PPI report eased some concerns about inflation in the world's largest economy. Data showed U.S. procedure prices increased solidly in January, but components of the Federal Reserve's preferred inflation reading was relatively tame, adding to hopes that PCE reading may be cooler than currently expected. So we have to keep an eye on gold. Gold is just popping on this tariff problem, and so don't get excited that this is the strength of gold. This could change in a minute, and the stocks could tank. Crude oil, and you can see crude oil decline almost $10, back to $70.84. edged higher on Friday. You can see here there's a little pop-up for 3 weeks of decline after U.S. President announced a delay in implementing reciprocal tariffs. Benchmark crude rose 0.5% to 75.36, while WTI declined to futures were up 0.3 to 41.48. Both benchmarks remain on track for weekly gains of around 1%. If the tariffs if implemented could dent global economic growth and thus the demand for fuel oil. Meanwhile, traders are pinning on hopes of an end to the Russian-Ukraine war after Trump spoke to the presidents of Ukraine and Russia. The expectations that potential peace between Russia will usher in the end of sanctions affecting supply flows. So that's one of the concerns. Whether this Ukraine-Russia deal will be done, we don't know yet, but the market anticipates it will be done. Manufacturing sales in Canada. Stats Canada says manufacturing sales rose for the straight month, 0.3% to 71.4 billion. Agency says the increase of 12 out of 21 subsectors climbed higher, with sales of petroleum and coal up 3.4% and the food product sales up 1.9%. However, in constant dollars, overall manufacturing sales fell 0.8%. In a separate report, Stats Canada said wholesale sales, excluding petroleum products and other hydrocarbons, and excluding oilseed and grain, fell 0.2%. Wholesale sales were down in 3 of the 7 subsectors, including 2.1% in machinery and 2.8% in building material. Right, Canada summary. The sectors most vulnerable to Trump's tariffs include primary metals like aluminum, which has already been hammered, food and beverage manufacturing, chemicals, machinery, and aerospace. Other sectors like wood, pulp, and paper, non-ferrous metals, plastics, transport, and wholesale could also face significant impacts. These tariffs could disrupt supply chains and increase costs, potentially leading to higher prices for consumers and reduced competitiveness for Canadian businesses. All right? So here are the companies that you just should keep an eye on. All the motor companies, the steel and aluminum, the forestry, West Fraser Timber, and the food and beverage, chemicals, and machinery. So the tariffs are supposed to be introduced on April the 1st. So that's basically what we need to keep an eye on, and don't get too bent out of shape about tariffs and whatever. We'll have to wait and see what the impact will be. Right, technical analysis. Let's begin with the North American markets, 3-month daily. There is a flat trend here. Following the rally seen during Thursday's session, stocks turned in relatively lackluster performance. The major averages bounced back and forth across the unchanged line before eventually ending the day mixed. Okay, so nothing much there here. Negative 2.38% to 4.16%, and the green one really is Nasdaq, which jumped 7.21%. The TSX 1-day year weekly, you can see here on January the 27th, it hit a record of 25,875, closing down about 400 points, but it has increased by 21%, 44,500 points for the last year. That's a substantial increase, and you should have made money on this time frame. TX 10-day 30-minute chart closed at 25,483. This is a $500 point range. There's a support, a kind of resistance at 26,000, I guess. 26,700, maybe around that, and but whatever. Canadian market notably low on Friday, where investors reacting to some weak earnings updates and showing weaker than expected U.S. retail data. Worries about potential new tariffs, as well as Benchmark composite ended out 215 points. Down here, around here, 215 points to 25,483. Economic manufacturing sales, we spoke about this in the previous session. All right, looking at the TSX sectors, and you see here the TTK, which is the information technology. Basically, Shopify is the one that's pulling this up. And you have the energy index down 7.63, with the financial services up 16.64. That's the financial services. And here is the, sorry, this should have been, TH is the one, 0.11% decline. That's right here. And that TTHC's healthcare, which is down slightly below energy. Commodities, 6-month daily, and you can see here it's a downtrend. Natural gas obviously popped up because of the winter storms that are in the northeast, and crude oil took a it's flat at 0.04. Nothing much here. It tends to be downtrending. Yeah, kind of. Basically, the commodities are waiting for the tariff issues to be resolved as well. Looking at the TTFS and banks, and you can see TD jumped about 9%, and Sun Life at negative 5.83. It's flat here. The banks are being flat because they're waiting for earnings report, which should be soon. So that's the reason why it's all flat. They're waiting for earnings to be reported. TD Bank earnings date March the 6th. It pays $4.08 in dividends. It closed at $84.64. As $87, kind of the resistance. It hit a record on September 20th, 2024 at $87.88, but 87 is where it broke through here slightly. It didn't get to break that, but it just popped up slightly and then came down to $84.64. And here there's a major pop-up. TD Bank to get $20 billion from selling Charles Schwab's stake. So they sold that to meet the obligations. So it's oversold right now, probably going back to 87, but I'll wait and see. Royal Bank, February 26th, $5.60. It closed at 180 in December 6th. It's closed trading now at 168.67. It's a very tight range. It is getting to oversold, not quite, but it has to come down a little bit more for it to be oversold. So look towards below 168 if you're going to go into Royal Bank. The energy index and energy companies, and you see the IMO jumped to 1.78, the VET negative 13.7, downtrend tracking crude oil. So really, all of these are kind of flat somewhat, with just breaking over IMO at 1.78%. So nothing great here. Looking at IMO itself, the dividends were $2.40. It had set a track 52-week high in November, 108.51. On February the 2nd, it closed at 102.36. So it has come down $4, I guess, to 98. It is oversold, bouncing off oversold now, and hopefully it'll break through 100 in a couple of months. Suncor, 220.21 is the interest annual dividend. It closed at 58.31 in September, on December the 11th, which is around here, I guess around here, and it's come down to 56 at $2.56 range, $2.50 range here, between 54.50 and 57. Enbridge, $3.63. Enbridge on Friday reported fourth quarter profit of 352 million. For the year, it 3.16 billion net profit, with revenues at 38.22 billion. Look at the blog for details. It is oversold at this stage. Here it's been profit taking, we believe, that brought the 65 down to 61. Right, the earnings in the next 5 days are listed as sample. Here is a sample. Canadian Tire, whatever, Nutrient, and so on. So be conscious of earnings that are being reported in the next 5 days. Important to note. Right, stocks to trade on February the 7th, February the 10th RTMA. We gave you some stocks to track and the execution. I think you got this on an email. I'm not sure, but just for your purpose's sake, $14.85, 1%, 3%, 2%, 2%, 2%, 1%. A buck or two, you'd have done fairly well. Right, the economics calendar has been posted to the blog. Up to you to go check the data. Thank you for listening to us. I appreciate it. For this week, be calm, be steady. We will have turmoil, up and down volatility. There'll be words said here and there about the economy and whatever. But just be patient and we'll see how it goes. Thank you.